We caught up with the management of Tata Consumer, Sunil Dsouza, where we tried to understand how the quarter has been and what the outlook is for the second half of the year. Hi Sunil, thanks a ton for joining us today. To begin with, Sunil, on the face of it, the numbers look largely in line with what was expected from Tata Consumers. Your revenue has shown a marginal uptick while volumes have declined substantially. Now, is the revenue growth coming on back of price hikes? If you can elaborate on that and tell me if you've taken those price hikes, across what product and portfolio has that happened?
So let me start off with the last comment first. To give you a snapshot of the results, we had a 13% top line, 11% EBITDA, and a group net profit of +1. And I'll give you the moving parts out there. Now, when you break down my top line, you break it into two pieces. A is organic, which is the organic businesses that we had. We grew top line +5. And because of Capital Foods and Organic India, we got the extra +8, and that's why we're reporting a 13. EBITDA 11 was a bit of pressure on cost of goods, primarily to do with India tea, and I'll come to that in a while. The 11% EBITDA didn't translate down to the group net level for a very simple reason. We had two pluses and one minus. Sorry, two minuses and one plus on that line. There is amortization and this thing of the new brands, which is roughly about 55 crores. A. B, last year, we were significantly cash positive, about 2.5, 2.7 of cash. And this quarter, till the middle of the quarter, till we finished the rights issue, we were in debt. And therefore, there is a swing on the interest income line of about 90 crores. Those were the two minuses. On the plus side, we've got one-off offset because of the integration of the wholly owned subsidiaries, and we've got about 75 crores of the upside out there. And that's why 11 doesn't translate to +1. So that's number one. In terms of portfolio pluses and minuses, I would say significant pluses: salt market share on a MAT basis, 150 bips plus. There is Sampan, which continues to grow at 26%. International, both top line and margins now in a very good space. And in international, UK and Canada now are firing all cylinders. US is, I would term it, out of the ICU, but still not out of the hospital yet, stabilized. So that's a positive. Capital Foods crossed 200 crores for the quarter. Organic India crossed 100 crores for the quarter. So that's fantastic news. And they've been growing 30% quarter on quarter. So as we integrate, as we expand distribution, we are seeing the numbers coming in line with the thesis that we had for acquisition. Now, what is not working for us is there has been about 25 to 30% increase in tea prices, out of which we've been able to translate only 3 to 4% in terms of consumer price. So we've still got a gap there, and that pressure is telling on the shrinkage in the EBITDA margins. Two reasons for that. A is we don't want to take a step jump and have a demand shock for the consumer. And number two, we operate in a competitive environment. We want to make sure that we are not completely out of whack when we take pricing. So that's one piece. The second one was ready-to-drink beverages, where certain competitors in certain geographies came in at a 10 rupees price with significantly higher trade margins. We did not react fast enough. And now we are putting in measures in place. So we have seen a bit of recovery now. And this month, October, across the board, I think numbers are starting to look much, much better.
Sunil, fair point. There is a little bit of an improvement and hopefully that works out for you and the sector. With respect to your recent acquisitions, Capital Foods and Organic India has driven growth significantly. They've both grown about 45% this quarter. Do you expect this momentum of growth to continue into H2? Or will this normalize into FY26, say? Also, while we're at it, give me a sense of what's happening on exports, because if exports are at optimal level, then we may not expect too much alpha going into the next year or the second half of the year with respect to exports. So just break down where the growth levers will be.
So let me say Capital Foods and Organic India are part of what I call the growth portfolio, right? And the good part is now, after 4 years, 4.5 years of existence as a company, where we started with two legs of one tea and one salt in the year 2020, now we've got four legs, all in the 800 to 1,000 crore bracket. There's India beverages, there's India salt, there is growth businesses, and there is international, right? Almost four. So four-legged stool, and four-legged stools are normally more stable than two or three-legged. So that's the reason why I emphasize. So we've got now a fairly diversified geography and portfolio mix. A. B, we've always, when we did that, we had guided earlier, before we did Capital Foods and Organic India, we had guided for 20% of our portfolio being a growth portfolio, which will grow at 30%. When we acquired Capital Foods and Organic India, we have guided for 30% of the portfolio growing at 30%. So we do expect the 30% to continue for some time. The simple reason why, even after 6 months, Capital Foods was 250,000 outlets coverage when we took over. It's about 5 to 550 right now. Similarly, Organic India was 25,000. I think we are about 90,000 right now. Incidentally, we touch about 15 lakh outlets directly, 15 to 16 lakh outlets directly. So you can imagine the runway that exists. A, apart from distribution, portfolio expansion, also we've, how do I say, we've started the innovation engine only now, because the first 3-4 months we were focused on making sure integration is in place. So we do expect significant growth to continue, the 30% number to continue for some time to come for Capital Foods and Organic India. On exports per se, we have exports across different parts of the portfolio. In Capital Foods, about 17 to 18% of the mix was exports when we took over. In Organic India, about 50% was what we took over. So when I say Capital Foods and Organic India will grow at 30%, these exports will continue to grow at 30% as well, if not higher. Apart from that, what we have done is we have used Capital Foods distribution system in the US. We have gone from, I think, if I'm not mistaken, we had 3 or 4 distributors in the US. Now I think we are up to 11 or 12 distributors, right? So we have leveraged their infrastructure to put a better distribution system in place, which we are now leveraging to grow our whole exports portfolio. So exports should be at a 30% plus for some time.
Going into the second half of the year, Sunil, how do you anticipate volumes to move? This quarter, of course, we've seen a 4% decline, driven by weak demand in the urban part of the country. Rural, I know, is picking up. Going into the second half, do you feel like there could be a wild swing and we might move to an increase in volumes, or is it going to play out in a more gradual form or way?
I can't comment about the rest of the companies, but I can comment about what I see. We do not have such sharp swings with the festive, etc., because we are neither discretionary nor impulse, right? So we are not, I mean, a TV scooter company, which is normally stuff booms in Diwali and festive, or chocolates and sweets, which again booms during festive periods. But if I may term it, we are a stable, steady staples company. And therefore, while we will see some ups and downs, we will not see such huge seasonality. That's point number one. Point number two is, I think I have said it, we have seen improvement in rural. Because I think we've had more than decent monsoon. B, the MSPs have gone up a bit. And C, I think cost of inputs for agriculture, which had put pressure on real incomes in rural last year, I think those have been fairly stable. So therefore, farmer incomes are expanding and not getting squeezed. And therefore, I think you're seeing that translate into spending. But on the flip side, I think food inflation is probably pressurizing. I think food inflation, a little bit of weather and floods, etc. I think that is the second piece, which is pressurizing urban. Between the two, I think I would err on the point of probably saying we are going to see volume growth coming back in the second half of the year.
Okay, that's good to hear. With rural demand improving and urban demand softening, how do you see this shift impacting your portfolio strategy? will you sort of focus more on a market that is seeing that improvement, or would you consider remaining in a subdued setup but hoping that urban starts seeing some recovery?
Samina, actually speaking, I have a better traction, better market share in urban rather than rural. Rural is a share opportunity for me. And as we expand distribution, I do expect my numbers in rural to pick up. But if urban picks up, the uplift on TCPL's portfolio is far faster than rural. So I am keeping my fingers crossed that we will see a revival in urban and therefore overall TCPL in the second half of the year.
Very much, Sunil, for talking to us and putting those numbers in perspective and helping us understand what's really going on with the sector, and of course with you, which is one of the leaders, Tata Consumers.